Hello and welcome to this week's Gig Harbor Market update. It's the Busted Finger edition. Working out at 5 o'clock in the morning when you didn't get enough sleep because it was too hot leads to some accidents. So be careful with free weights and don't smash your hands with 60-pound dumbbells. Anyway, I can't type this email up, so I'm doing it purely in video format. So, you'll have to look at my screen in order to see what I'm talking about here. So let's get into June numbers. It is the first week of July. Happy July 7th. It's a nice break from the doldrums we just had with the smoke coming in and warm temperatures and no wind. So it's good to have a little bit of a marine climate back in action. So. Without much further ado, let's talk real estate here. So let's switch over. This is all going to be one-handed here. I'll remember to take my picture away in case I block some of the data. But let's look at sales price. And in my email last month, I said I expected sales prices probably to go down by $5,000, and it didn't quite do that. It flatlined. So yeah, there you have it. I said 780, and we're at 785. So that's just. I think this is probably the peak for the year, so we'll probably see the sales price slowly climb down after this month. Can't really say anything about that, but I mean, there's some listings out there that are quite high, so they might push us a little bit higher just because there's, I don't know, I think people are trying to get a lot for their house towards the end of the season here. So I'm curious to see what those few houses will do. Anyway, let's look at new listings, and this was the big point of last month's email. I was saying by looking at 3 months here, if you see it in my top right, oh, my head's in the way, let me remove that. This is an aggregate of the past 3 months. So this June number here says 288. That's an aggregate of going back. Let's go to the monthly data. So it goes back from June, May, and April numbers. So it combines those 3 months and then spits out our rolling 3-month number. So yeah, we continue to go high. I was hoping to go in the 300s, but we didn't quite make it. We got to 288. And you can see if we go to the monthly data that our June listings for the month were actually lower than May listings. And so what does that mean? That means we can probably expect 100 or less, or fewer, should I say, listings in July, so this month. So that's just the seasonal trend. So interestingly, even though we might get less than, let's say we get 100 listings, we could still have July be our peak in the rolling 3-month data, because if we do the simple math, of 105 plus 106 plus our, let's say, 100, that put us at 310, 311, and that would put us squarely above. I know I keep flipping back and forth, but the high. But I don't know why I'm showing this data, because it's technically old data that it's extrapolating from. But I think July is going to have fewer listings. Now, what's interesting is let's do the month supply of pending, because this shows how much inventory we have, and the more inventory we have, the more houses people have to choose from, right? So here we are on the monthly basis. We're up now at 2 months of inventory. And what does it mean going up in inventory? Basically, that means that houses aren't selling as fast as they normally are, and we're just seeing more inventory and fewer buyers. So that's basically it, that we're seeing inventory creep up. And when we can look at our foot traffic, which is, as going to show per listing, our foot traffic has declined here. So this basically shows buyer activity. And if we see buyer activity go down, we can expect inventory to go up, just because less houses are being bought, right? Makes sense. So I expect this buyer activity to keep dropping as we enter into the slow season, and I expect inventory to, where's the inventory again, month supply pending, to probably poke up, maybe even go up to 2.5 months of inventory. Still a far cry from a balanced market. It'll be a seller's market for a while, even if these trends continue, but that's what we're looking at. Days on market we can look at real quick. Let's see what the 3 months says. So they're pretty much identical. So when people were selling houses back at the beginning of the year, 2 months it took to sell a house. And you can really see the sentiment that changed all the way down to 7 within 5 months. Now we've creeped up to back to 10, and that's just really showing that there's less buyers, less competition, and houses are starting to stay on the market longer, which is good news for people who have patience and have decided to wait to the end of the year to look for houses. So, and that's something to be aware of. We can look at homes, pending sales, closed sales, months supply pending. Okay, well, we can look at let's do percent of original price. I don't know, oh, I'm covering it still. This, what we see here, this dip, was sellers wanting a lot and buyers not paying for it. So there were a lot of price cuts that happened in January. So end of last year to the beginning of this year. Now you can see that we're back at 100%. So houses are selling for their original price, which is an interesting thing that I think market sentiment has established itself now. So the prices are pretty much here to stay. And I think people got used to it, and sellers adjusted to what's currently happening in the market and the economy. And buyers have also, they've said, okay, well, we're not going to see the big crash that a lot of us expected. So I think we found a happy, I don't know if it's a happy medium, but it's a medium nevertheless. And let me see if there's anything else I'd like to show you. Okay, I want to just quickly look at some historical data here. We're going to go back 2 months supply of pending, and then we're going to go back, let's do 10 years monthly data. So even if we hit that 2.5 that I just mentioned, that'll put us back in 2018, 2019. So I thought these were pretty good years to be in the market. Wasn't anything too crazy, but you can see that in order to be in a balanced market, we'd really have to see something in this range here between 5 and 6 months of inventory. And let's see, sales price, it's creeping up slowly. It's at its this is monthly data, so it's hard to extract. You're getting good data from it, but once you go to rolling 12 months, so this is basically taking the whole year and dividing it by 12. We've had a dip here, so we were at the high of 770, now we're at 750, which is interesting, seeing the long-term trend versus the short-term bounce up. So I don't know what's going to happen in July, just because I've seen some houses that are overpriced, and I think a few of these houses can really shift the numbers coming in July if we have fewer listings. I would like to see it I would say dip down slightly, or even just continue to flatline. If it does go up, it's just because of I guess some people agreed to spend a lot of money for houses, and I can show you one in particular that is right in the neighborhood here that I like. Let me just show you what I'm talking about. So these, this house is on the market for 1.75. It sold 2 years ago for 1.5, which was already a credible amount. So they want extra $250,000 for essentially being in Gig Harbor, but it's not even waterfront property. They have all this cliff below them, and the drive for all the beach houses there. So this house, it's not updated inside. It's it's vintage, let's say. Let's see, let's go back upstairs. Started in the basement here, but for this house, it's definitely not worth 1.7. And so I was expecting they'd just put it on the market for what they bought it at, just to see if they can recoup any losses. I mean, not incur any losses, and see if they can get their asking price back. Because even 1.5 was overpriced for this house. As you can see, it's yeah. So there's a few houses on the market. That was just one of them that came to mind because I saw it go on the market. Yeah, today or yesterday. I saw this yard arm out there. But let's see. But yeah, so there's a few houses that are gonna be out there. Who knows what's gonna happen in July? I think it's gonna start cooling down here. So yeah, I think prices will continue to go down, and that yeah, just seasonal patterns at this point. I can't think any, there's talks of recession in the next 2 or 4 months, or by the time next year rolls around. As Matthew Gardner says, he's expecting like 5% mortgage rates. What does that mean? It would mean that the Fed is trying to do a soft landing by allowing cheaper money to be out there for loans and trying to get the economy back going. So usually when the Fed lowers rates, it's a warning sign that things are going to get worse. So yeah, we'll see. It's kind of up to the Fed right now and what's going to happen with the next bank crisis here. We're probably in the the fourth inning of the bank crisis. So yeah, anyway, so all we can talk about is what's happening now and speculate about the future. But so anyway, thanks for watching. Thanks for dealing with my low energy here. And hopefully next week it won't be as painful, but it might still be a pure video format just because it's hard to type with this ding, 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 ding. So anywho, enjoy your weekend, and yeah, I'll see you next time.